On today's Hashi, I'm discussing housing inventory, U.S. population growth, and investor home purchases. Today is Monday, May the 20th, 2024. I am Byron Lazine, and the hot sheet starts now. Okay, as we kick off another week here on the only internet show that uncovers a 24-hour look back on the housing market every single Monday through Thursday. That is the hot sheet. Let me know which market you're tuning in live from today. Looking forward to kick off this week with all of you guys. We got a whole bunch to uncover, including inventory. It's how we kick off every single Monday per the Altos research. Okay. For the first time, we can officially say it for the first time since, I don't know what it was, November or, I guess it was October, November of last year. We have crossed the 570,000 mark on active listings. Yes, as we sit here in May, coming up on Memorial Day weekend, we have now crossed over the inventory peak of 2023 officially. It took all the way until the fourth quarter to set that inventory peak last year. Now sitting here Memorial Day week, we are already there. I expect active inventory on the market to continue to climb throughout the summer and into the fall. 578,000 is the official number that inventory rose over the last week. That's the peak for this year, and it tops the peak for all of last year. Okay. The same week last year, we were only at 424,000. Okay. So we hit that peak last year at 569,000 in November. It was okay. Same week again last year, we were 150,000 less this time last year on active inventory. So don't trick yourself. Don't confuse yourself. The country is in a much better, much healthier place as it relates to active inventory. Don't take a small sample size of what you're dealing with in a particular neighborhood or a particular town or city. You might have lower inventory than the rest of the country, but the rest of the country is experiencing an uptick in active inventory. If it hasn't hit your market, your neighborhood yet, I bet you it will. And I bet you it will soon. If you look back on history, certain parts of the country seem to react sooner than others. Okay. So 578,000 is the number, still well off of the 2019 time this year. Let's look at May 2019, because that to me is the most normal market before all of the craziness. And the same week in 2019 was 937,000. So a ways to go from what I consider a really normal market, but we are improving. We are getting closer to normal each and every single week. We're 36% more active inventory than last year, and I expect that number to continue to increase throughout the summer. We could be like much of Florida as a country where it's 50% over last year at some point here this summer. New listings, though, declined the last 3 weeks in a row. New listings is obviously one of those metrics that can increase, inventory from a week-to-week basis. We're seeing active inventory increase week over week as things are taking longer to sell, not primarily driven by new listings. New listings is inching closer and closer over the last 3 weeks to levels that we saw last year, which was the lowest ever recorded on new listings. So last year, the same week, we were at 59,000 new listings. We're at 67,500 this week for this year, when in 2022, when interest rates were ratcheting up, we were at 83,000 on new listings. I was very hopeful that we would see 2022 levels as we moved through this summer, like following this trend line that we were on here for a little bit, and reflect closer to 2022 levels, which is still well off of, past years before pre-pandemic levels. But we're not. We're declining on new listings. I would imagine this is primarily due to the affordability on the other side. Remember, most sellers are also home buyers. they don't feel comfortable going out and buying a house at today's prices and or mortgage payment, which is more likely the case than prices. People shop on payment more than they do on prices. It's probably an indicator of why this number is declining. Okay, we want to stay above this level. This red line here is the lowest ever recorded last year on new listings. We're starting to trend down closer to that. You see this drop here last year. That's going to be the holiday drop. Okay, from May to June. That was the last week. This year, Memorial Day is coming a little bit sooner. It's this week. So we'll see next week if we get a drop. Really, the next 2 weeks are weeks we would have to consider here on a potential drop for Memorial Day. I guess more so this week, that we're in right now. So next week, we'll take a look at it and see if we get a sharp decline from the holiday, as people were like, oh, well, you know what? I was going to put the house on the market this weekend. Didn't realize, like, I looked at the calendar today and I was like, oh my goodness, Memorial Day weekend, this weekend. Can you believe 2024 is moving that fast? It's like the picnic is going to be coming out. The red and white checkered blanket, those are coming out. The backyard parties, it's all happening this weekend. And people are going to say, you know what? I'm not going to put my house on the market. I don't want to do an open house. I know we've got an open house strategy, a coming soon strategy. Didn't realize that Memorial Day weekend was sooner this year than it has been in past years. I'm going to skip putting the house on the market. That's what we see as we go back each and every single year. Even when we go back, this was the 2023 level, but even when we go back to 2022, you see a drop of 82,000 to 72,000. And then it spikes up again. And then what do you see there? You see a 4th of July drop before a spike, and then the interest on new listings just kind of peters out into the fall market. Okay, so expect a similar story this year and this week. Just as people hold off, doesn't mean the interest of listing their house has subsided. It means that people will hold off picking this particular week in comparison to the week prior and the week after. That's what we see throughout history. Also throughout history, we see a third of homes experience a price reduction before actually selling. 33% would be a third. Right now, we're trending at 34%. So we're just above what we see historically, okay? We're above last year's mark of 30% by 4%. But we also are experiencing a much more steady incline on price reductions. You typically will see an incline as we go through these higher inventory months, the summer and into the fall, okay? But in 2022, we saw a steep incline on price reductions. That was driven by the steep incline on the mortgage interest rate. So we're having a much slower incline here, more gradual incline, a more normal incline. This is normal. This is trending normal, okay? So we're at 34% right now on price reductions. And somebody says, I don't want to reduce my price. It looks weak to the market. Here's a slide to show them. In every market, about a third of homes will experience a price reduction. Remember when we discussed price, we talked about that aspirational price, which is the one that you picked. You didn't pick the one that got the most of the market or the market value. So now we need to move down to market value pricing as opposed to sticking at this aspirational price and accumulating days on market. All right, there you go on the inventory. Just a quick note here on demand. I think it's worth noting that demand on mortgage applications is down from last year and the year before. This is really due to the affordability constraints that is hitting the U.S. consumer and the U.S. home buyer. Okay, so we know that there's pent-up demand as those rates move down, but the reality is right now, over the next 30 days, the demand is less on mortgage applications than it was the last 2 years. Be truthful in your analysis of what the real estate market looks like. Don't use words like crazy or a lot of people want to buy homes and they can't. Less people want to buy homes today, which is why we're seeing less home sales. But there is a ready, able, and willing buyer out there. Have to do a little bit of work uncovering who that is and obviously pricing and marketing the property correctly. About 4 million homes will sell this year. Let's take a deeper look now at how many people might be homeowners in the future. There's a study that was done on a Substack from Aziz Sunduri. Okay, if I butchered that name, I apologize, Aziz. But this is a fascinating study. Lance Lambert covered it over on Resi Club. The study was so fascinating, I actually dug into the entire Substack, and I want to share this with you. The U.S. housing market might be falling short due to a population growth falling short. So right now, every so many years, the U.S. Census Bureau projects total U.S. population. Back in 2008, the U.S. Census Bureau projected that total U.S. population would rise to 350 million by 2022. Okay, that was just a couple of years ago. The Census Bureau then revised that projection to 341 million for 2022. So down from 351 to 341. By 2017, the projection was further adjusted to 340 million. The actual population in 2022 was 333 million. So they got it wrong every step of the way. The projections were too high from 2008 all the way to 2017. And then when we clocked in reality in 2022, it was far less than the projections. This means the U.S. housing market had 18 million fewer people than what we anticipated back in 2008. 18 fewer people to be part of a household, to be a household leader, okay, to be someone who's a home owner. Household leader would be head of household, okay? Home ownership or headship are the words they go off to describe that. The U.S. Census Bureau has been a better job as of late estimating migration. However, it has significantly underestimated the decline in U.S. fertility rates. Okay, this is a big one that is really almost unchangeable. Okay, with where we're heading on fertility, it accounts for 3/4 of the forecast downgrades. So the study done here is like, okay, well, what if we increase, migration, for example? Well, we're not going to be able to increase migration enough for the lack of the fertility rates. Okay, that's the argument here. By 2038, the U.S. Census Bureau expects U.S. deaths to start exceeding native births. By 2038, population growth between 2038 and 2080 is expected to become via migration. That's where the growth will come. It's not going to come from native births. Okay, so very interesting. By 2081, the U.S. Census Bureau expects the U.S. total population to begin declining. Okay, here's a chart to show you that. U.S. Census Bureau continues to downgrade. How much further will they downgrade it? Okay, right now the 2003 forecast is, and going into the late, after 2050, 2060, 2070s, is it's going to top off and then start declining after the 2080s. Okay. 2008 forecast was up and to the right. 2012 forecast up and to the right. 2017 forecast up and to the right, like sharp inclines. And this 2023 forecast, it's the biggest correction the U.S. Census Bureau has made. So I guess what I'm looking at there, when I look at this, it's like, whoa, is their next correction going to be even more dramatic of a decline here, or of a slowing down, rather, of population growth? We don't see that decline until 2080, but we certainly see a leveling off that is much different from their last three forecasts. What's the next forecast going to look like? It's interesting. What does it mean for the home ownership rates? 439 million was the U.S. population in 2050, then to 400 million in 2012. We had a forecast. 2017 is 389 million. Now we're saying 360 million in 2050. That's almost 100 million swing from just 2008 to 2023. Here's one argument for wherever you sit on, migration, a very, very political topic. I don't want to get into any of that. But we certainly, Elon Musk talks about it all the time, for example. Elon Musk says we need to, his words, we need to have more kids in this country. Okay. Can't force people to have kids. Okay. But we certainly need to increase population if we want to stay at the top of being the world leader. We're going to need to increase population in this country. I don't think that's debatable at all. How we do it is certainly debatable. Okay. I think of it more like a college football coach. I think we should be recruiting to get the best talent in this country, not making it hard for the best talent to migrate into this country. Okay. I think we should be looking at every country, not just a few, to migrate in the most educated, best talented folks to come and add to the American dream. Okay. And I think there needs to be a balance. They're obviously, they've got to figure out how to get migration, figured out in this country so that everybody can do it legally and all of that kind of stuff. Got it. Cool. But it's undebatable that we can't close the doors if we want a prosperous economy moving into the future. And for all of us who care about housing, home ownership rate, investment, we want that number to keep increasing. I don't think there's much of a debate there. This is what home ownership rate has looked like since World War II. This is up and to the right, just like some of those projections on population that I showed you. Okay. Through ups and downs, home ownership has grown steadily since World War II. Is that going to be the case in the future? Okay. Here's how you calculate headship, which is head of household, and home ownership rate. It's a simple schematic here. You've got a country of 10 people. Maybe many of you would sign up for that. Hopefully 9 of them don't have their real estate license, but you've got a country of 10 people. Okay. One person would be one dot. These 10 people then live in 4 households. Okay. So 4 houses in the country. Think of each household having a head of a household. One household has 1 person, another one has 2, another one 3, another one 4. Somebody's the head of each household. So you've got 4 heads divided by 10. That's a 40% headship rate. Okay. 2 of these households own their home. 2 of them rent. 2 owners divided by 4 households would be a 50% ownership rate. Okay. That's how they calculate home ownership rate. The number of homeowners depend on the headship and ownership. 10 people times 40% times 50% ownership rate, 40% headship times 50% ownership rate is 2 owners. Okay. But the 50% ownership rate, that's how they calculate it. When you hear 65 or so percent home ownership rate, that's how it's being calculated. Over the last couple of years, the big thing is we're running out of inventory. Okay. We see that markets kind of shift, right? We're seeing home ownership or we're seeing inventory now increase due to the affordability rates. But we heard that the last 10 years we're 7 million homes short to meet demand. But we have a tendency to overstate things a lot. We get into these markets or even bubbles and we're like, we're never going to have enough inventory over the next 10 years. When you look at some of these numbers in this study, you're like, maybe we're going to have too much inventory one day. It's kind of that silver tsunami argument that a lot of people have that don't buy into, and certainly don't buy into anytime soon over the next 10 years. Okay. But we're thinking long-term here with this. But when we look at inventory and we look at the conversation over the last 10 years, did we overstate it? I've often said, do we have the right inventory? Do we have the affordable inventory? It seems like we're creating an abundance now of rental inventory. Are we, though, when we look deeper into these numbers? Or it seems like we're creating an abundance of higher end inventory. We just overstate things when we're in the moment all of the time. During COVID, it's like, wear a mask. Then it was like, wear a mask outside. Then it's like, wear a mask outside when you're 100 feet away from people. Remember when Chris Cuomo got in trouble for running in his own neighborhood for not wearing a mask? Like, we take it all the way until it doesn't even make sense anymore. That's where we swing on these extremes. It's like, oh my gosh, nobody's ever going to be able to find a home because there's institutional money coming in and we didn't build for 10 years and nobody's ever going to be able to afford, yet there's going to be 4 million sales this year and inventory is increasing. Okay. So these markets shift. And when they do shift, they start to shift, closer back to normal ahead of when we think. I don't see many people taking a jog with their mask on 100 yards away from people anymore. We've shifted pretty far away from that extreme. Okay. The pace of population growth, though, is collapsing. So are we overstating the inventory? Excuse me, the inventory issues. Okay. If you look at this, you'd be like, I think we are. I mean, this chart in this study done by Aziz, it's like, holy smokes. You've got net migration and birth rates by 2040, by 2038, turning organic growth, turning negative. Okay. That growth now is going to impact home ownership and headship. Like most countries, the American population is aging. Over the next 30 years, the median age will rise from today's level 39 to 43. The number of people over 65 will rise from 60 million to 100 million. Now, there's a couple arguments for that. Older people like to own their home, and baby boomers, we've seen that. They're still home owners, okay? But we're going to see less boomers over the years. If we go to 2040, you see far less boomers than you do right now, okay? This is going to impact potentially home ownership. More older people head households and own their own home. Okay, if we look right now, home ownership rate in the mid 60s and headship rate, okay, 75, it's being dominated by the 75 plus, 65 plus, 55 plus when compared to 25, 35, and 45 plus. Makes sense, okay? Home ownership rate is falling at each age, but more for older owners. Interesting. So as we get older, they're saying, hey, look, or Aziz is making the case, look, home ownership rate could start to be on the decline, which then this might be good news for investors, which then could create a case that more people are going to be renting. Summarizes it here that slowing population growth will cause slower home owner growth. This is the change in the number of home owning households in 5-year increments. Obviously, the great financial crisis stunted home ownership growth. Now, when we say growth, you're still seeing home ownership growth per year, but it is declining. It is going down from now to 2060. Okay. Still growing, but that growth is declining. This is the number of home owners for each year, change in number of home owning households in 5-year increments. So what we saw in the great financial crisis is actually going negative. We don't see that through 2060 per this forecast, but we don't see an increase like we saw from the 80s up until really the great financial crisis. We see a continued decline since the recovery of the last 5 years. That's per this projection. Okay. Here's best case scenario, according to Aziz. Bullish case where headship and ownership rates gradually rise back to their maximum level since the mid 70s. That's as far back as Census Bureau has reliable data. In this scenario, the rate of home ownership growth rate rises faster than rentership. But in a bearish case where the secular trend of falling headship and home ownership, especially for young people, reasserts itself, this is where home ownership growth grows more slowly than rentership. Doesn't believe that these two alternative scenarios are equally likely. The factors driving declining headship and ownership rate, scarring from the GFC, declining and delayed marriage, failing fertility, and high cost of housing seem much more likely to intensify than they are to dissipate. There are reasonable arguments to be made that the demand for rental units will grow faster than homes for ownership. Even in the and we've seen builders place their bet on that with where they've been building. It's reasonable argument made for the demand for rental units will grow faster than ownership. Even in this bullish case, after a decade-long bounce, the pace of homeowner growth drops meaningfully. Okay, so this is even in the bullish case here. In the light gray, you see the bullish case, you see this dropping. So bullish, base, or bear case, you see homeowner growth dropping sharply in all three of Aziz's forecasts. And so there you go. Just, I thought a little bit of information. There's a lot here. I may dig into this on maybe a part 2, because he does go on in the study to say that he'll be looking to make adjustments to this when the next U.S. Census Bureau population, there's going to be Pew Research polling from earlier this year, and some other forecasts where there could be some updates coming, and I will certainly be looking for that. Okay, I promise you investor home purchases topic here. I'm going to roll that into tomorrow if we can fit it in. I've got to catch a flight up to Connecticut, so I've got a jet. The population and home ownership topic took a little bit longer. If you're interested in more of that, maybe comment to the live video or to the replay. Maybe I can even do a full video on that, breaking it down further. I thought it's a new report that just came out, so I thought it'd be interesting to mention here on the hot sheet. Big takeaway from today is we are at peak level for not only this year, but all of last year on active inventory on the market. We do see a 10-year right now back up over 4.4, 4.35 on the 10-year as we enter this week. 7.09 on the 30-year fix is where we ended the week. 7.02 on the weekly survey. So kind of just hanging around in the low sevens. If you haven't done so, please consider subscribing to the @NowBam YouTube channel so you don't miss a hot sheet show. We do this every single Monday through Thursday live at 9:30 Eastern, 6:30 on the West Coast. You know the deal in between. I will see you guys here tomorrow. Until then, of course, toodaloo.